Home sales are accelerating according to the National Association of Realtors. It says sales have climbed 22% since October. Foreclosures have pushed the median price for homes down to about $160,000, and lower prices may be motivating buyers. But our next guest says we really need to be very careful with these numbers and that this probably isn't the start of a real estate rally. Joining us to talk about this is Michael Fetter. He's CEO of Radar Logic. His company, by the way, issues one of the most comprehensive home price indexes in the country, the RPX Composite Index, and he's released some of that data right here on our air. So, Michael, explain to me why we have to be so careful in terms of interpreting these data.
Well, Carol, I think there are a couple things going on. First of all, you have to watch the timing of some of these data. The data that was just released by NAR is referring to a growth from October to January. October was a sort of unnaturally low period following the boost in sales that occurred as a result of the tax credit, which we've talked about on this show before.
So it magnifies the increase is what you're saying?
Well, if you go from a very low number to a somewhat more normal number, you're going to get a big increase. But on an absolute basis, it's not really a move in the market. What's happened over the last 12 months is timing has shifted as people took advantage of the tax credit related to housing.
What are you seeing then as far as, I mean, before we get to the price action, what are you seeing as far as the units sold kind of story in the U.S. housing industry? I mean, is it picking up again?
Well, through the end of 2010, which is the data period that we've released so far, it's really been sort of flat. It hasn't done much of anything. In fact, on a month of December versus month of November basis, it was down, and perhaps more dramatically than it has been any December over any November for the last 10 years. So there continues to be a myriad of issues with regard to actually getting closings done in the housing market. Can you borrow enough money to buy it? Are you going to actually get to a closing? Is the seller going to be able to sell? Remember, in a short sale, you need lenders to take hits for the sale to go through.
Now, you guys have been tracking prices. I mean, where are we in your view?
We hit a new low on the composite for the down cycle last week. I think it was Dr. Schiller was on your show a couple weeks ago and saying it's not a double dip because the index has not fallen below its low point in cycle. Well, okay.
But do we even see a real recovery? I mean,
we don't think so.
Let's be realistic here.
As you know, Carol, we think that the housing market busted, and it really has not shown any signs of real recovery.
And by the way, Professor Schiller's not terribly optimistic himself, is he?
Well, he's gotten very pessimistic lately. Yeah. But we think the problem is, as I've said before, there's just more sellers than buyers, and as long as that's the case, prices aren't likely to go up.
What do you think could be done to help the housing market here? I mean, surely you don't want another government intervention.
Well, you know, it's interesting. You talked right before the break about the B of A investor meeting today and the creation of a bad bank for $1 trillion worth of mortgages. As you know, we're terribly concerned with what's ultimately the pain that has to be taken for underwater houses.
When you talk about the pain, that's one bank, right?
That's one bank. The number could approach in aggregate mortgages $5–6 trillion. Then the question is, how much of that is overhang? How much of that has to be written off?
All right, I'm just thinking, if I'm a homeowner or something, I want to get out of my house, maybe I'm underwater. I mean, how much longer do I have to wait at this point? Do we have any indication of when we could potentially really bottom out here?
I think, look, Carol, here's the problem. NAR says that based on absorption rates and inventory rates, we've got a little under 8 months worth of supply. The reality is, when you add up all of the supply, which is houses for sale, houses vacant, not yet on the market, houses underwater, seriously delinquent, in foreclosure, almost in foreclosure, the number is closer to 60 months. Not
60 months, 5 years, 5 years.
So what we need is for some of that overhang to go away.
We need to blow them up, right?
But you don't want to see it in forced foreclosures. You don't want to see an increase in foreclosures.
Well, but who's going to absorb the foreclosed homes, Matt? That's the problem.
Well, that's the thing. I mean, that is the problem. I mean, do the banks have to just ultimately just mark it down? Let's be done with it already.
I think the banks need to reach into a historic playbook and pull out a recapitalization plan that attracts new equity into these investment situations. Each individual home is an investment, and let's get a reward for a new investor to come in and help bail this thing out.
And Michael has a very interesting recapitalization.
You know, Warren Buffett said buying a home was his third best investment he made. But that's not so true anymore, is it?
Michael wouldn't agree with that. He told me not to buy a home.
But when did he buy
anyway?
It was a while ago.
That's all the time we have, unfortunately. Michael, thanks so much for joining us. Michael Fetter, CEO there of Radar Logic.